All right, folks, welcome back. All right, so we're looking at the S&P futures contract for June 2022. On the left-hand side, you can see that we have a daily chart. And on the right-hand side, it's a 1-hour chart. So I'm only going to do this to save time, also bring your attention to levels that are sensitive on one time frame, higher time frame, and how it's subordinate on the lower time frame to those higher time frame levels. If you don't know what I'm referring to, obviously you'll understand more as we go through. All right, so this morning I had a short little video that I posted about how we had recently been in this trading range in here. And if we were to start to move higher and had displacement to the upside, this could have been a draw on liquidity. This is the objective I was looking for near term if we were to break higher. We had news this morning and unemployment data, which obviously, given the state of affairs at present, it's a heavy weight around the neck of the markets. So we had a move lower prior to the opening at 9:30. I talked about how until we had some kind of displacement, I wasn't really excited about doing much in the marketplace. I felt that 40.70 was a nice draw on liquidity, which would be below these relative equal lows. I posted that obviously before 9:30 a.m. So it gave you a target, okay, or my bias. So I'm thinking, what? If I'm pointing down here before 9:30, am I suggesting that we're going to go up here or here or here? No. So I'm looking for evidence to support the idea that a run below these relative equal lows is warranted. I also stated if we went below those lows, that we would draw into that fair value gap. Now, with the benefit of hindsight, obviously, when I'm talking to folks that have not been with me or they watched only post-production or post-market reviews or things like that, it sounds like hindsight, but I assure you, the folks over there on Twitter, and it's time and date stamped, I don't delete any tweet. If it's a typo, it stays. Okay? And in my age and my eyes failing like they are, it's probably going to be a reoccurring theme over there that I typed something incorrectly. But I'm not sweeping anything under the rug. I'm not trying to hide anything from you. I came out in video, explained that I would be more interested in seeing this level down in here. And if we did, we would draw into this area here. Now, that is suggesting several things. Number one, we're expecting the volatility, or I'm expecting the volatility to be significant enough to take us below these lows. And if that was to occur, then we're going to draw all the way down into here, which means what? We're going to have a small range day on the daily chart or a large range day. Clearly, a large range day. So there was a lot of things that I laid in your hands this morning that hopefully give you hope that these things are predictable. Obviously, I'm not without imperfections. Yesterday, I mapped out an idea on Twitter and engaged, and I took a loss. It was a 5-point loss. It was not a significant loss. And in fact, I called a level later in the afternoon how I could have easily gained that back. Now, when I say those things, understand the premise. Okay, why am I saying that? Am I saying it to beat my chest and sound egotistical? No. I wanted everyone to see what it's like, even if I do something wrong and I don't rush out there to try to fix it. Okay? Because that's going to be your initial response to you taking a losing trade in your demo account. Or worst case scenario, rush into trading live funds when none of you are ready to do that yet. Now, I understand there's traders in here that are watching the videos and you're probably like profitable. When I say that you shouldn't be trading with live funds, you shouldn't be trading with live funds with these concepts because you're still learning them. Which I'll end this video with a request from all of you, so you guys can let me know in the comment section what you would like to see going forward. I have a suggestion, and you guys are open to give me input on that. And you as a community will let me know what it is that we're going to be doing. All right, so on the daily chart to the left, you can see we have those relative equal lows I mentioned. The draw on liquidity was there. So I was focusing what? Sell side, or I had a bearish bias. I gave conditions that if we went below there, it's not going to go down there to go up. It's going to go down into this area here. So with those levels transposed over to the hourly chart now, this level here is this level on the daily chart. This level down here is this level. Now, obviously, some of you are like, that's pretty obvious, but you'd be surprised how many new students I have, and they get lost in the time frames. So whatever you're doing in your higher time frame, you want to start your annotations there, but keep them simple. You want to see a level that it's going to draw to, and or what key levels that may be a factor for changing or suggesting a bias is in play. As I did this morning, I said, I believe we're going to go down below here. I thought that's likely to occur. And if that does happen, we're drawing into this area here, not just going below relative equal lows to go higher. Because there's a lot of people all around the world that are being exposed to my content, whether it be directly from me or someone that's learned my concepts and have tried to create something new with a twist of their own. They're teaching that it's always a relative equal low or equal lows to hit those and then go the other way. That's not the case. Narrative must be understood, and narrative unfortunately requires experience, and experience is what I'm lending you. So when I'm talking to you, or if I'm pointing to something, I'm lending my 3 decades of experience doing it, so that way you can hopefully grow faster, but I'm not trying to rush you along. But it's easier for a student to be engaged when they're shown something, to anticipate something, and then they have the benefit and enjoyment of watching it pan out in their own charts, which I think that's the epiphany to every student under me, and I guess anyone else, when they have that moment of astonishment where it delivers as they're expecting or hoping to see happen. It feels like they're in alignment with the marketplace, which is many times not the case for retail traders and new traders or long-term, struggling traders that are break-even, they just can't find their footing and can't be profitable. It's a wonderful feeling. And I know once you have that moment, you'll want to dig deeper. And that inspires me as a mentor too. So if you watch this pan out today and you expected it based on being in the community and audience members this morning before the market opened up with my commentary, give me a heads up in the comment section and what was it like to watch it unfold. So over here on the hourly chart, we had a fair value gap here, swing low, we had displacement, we consolidated going into midnight last night, New York time. It rallied up, traded into a fair value gap here and up into the bearish order block. So we have this order block, it touches it. You can take that trade, but I'm trying to draw your attention to these areas here, okay, where there's 3 candles, 1 candle in the middle that has an exposed area that is not overlapped with the previous candle's low, immediate candle to the right of it. So there's that little section that we call a fair value gap. Price goes above it, hits the order block, but look at the candles. See how the candles' bodies stay predominantly in between these 2 levels here? So yeah, there's a wick and there's a wick, but largely the volume is encapsulated in between these 2 levels. I drew your attention here. I mentioned how we would likely go below those lows, and then we have an old low back here. So even if you weren't looking at my commentary or watching it, this framework here, then running to that low, is something that you should have identified. But if you didn't, it's okay. You'll get it in time. This price or level here is the opening price at midnight New York local time. So I'm extending that out in time. So now think about what I've done so far here. Before the fact, in Twitter, in a video, and in a post, I stated that I'm interested in seeing these taken out, and I like 470 as an interest. Okay, that's a draw on liquidity. So if we're up here, and I'm stating that I think 4070 is interesting, your eye should go to that level and study what is at that level that may be of interest to me. So that way it forces you to dig into the chart. Now in the beginning, working with me as your mentor, this is going to be very frustrating for some of you, because unfortunately some of you just want it spelled out for you. And I don't teach that way. You're not going to learn that way, and I'm not going to spoon feed you. And you're going to learn better and more productively by you going in and doing the very things that you would be doing if you didn't need me holding your hand, which means going into the charts, looking for the evidence and details, yourself. So you had a bearish bias given to you. You had an objective, a draw on liquidity, and in the chart here, I'm showing you the framework for the daily range. The opening price at midnight. I teach there typically if there's going to be a down day, which is what I was suggesting, before the market opens at 9:30, we would see a bearish day and look for a draw to 470. If that occurs, your attention should be down between these two levels here, based on that daily chart. Okay. Now, incorporate power 3. My power 3 concept is the accumulation of shorts, the manipulation of those individuals that were already short. That's what this is here. That's a Judas swing. The market goes up to a short-term premium, which is high to low, back into a premium relative to this dealing range high and that dealing range low. Then the market breaks lower, trades below the short-term relative equal lows here, retraces, consolidates a little bit, breaks once more, consolidates, and then attacks the sell side here and aggressively runs through the 470, which is what we were anticipating based on my commentary before the market opened. And then we take our attention down to here. So if you are short, you take a partial here, then you wait for the daily range to fulfill. That means you have to submit yourself to time. What time? 3 o'clock to 4 o'clock. Wait to that last hour of trading because you'll get the delivery of price when it trades down into that. All right, now we have the 15-minute time frame on the left-hand side and the 5-minute chart on the right. You can see how we rallied up into that fair value gap on the hourly. We broke down. Once more, traded back above the opening price at midnight here. Breaks lower, consolidates. All of this we'll talk about later in the video. Then breaks once more, trades up into a fair value gap here. Breaks lower and aggressively runs into that higher time frame daily fair value gap. On the 5-minute chart, you can see here we have the equities opening at 9:30 a.m. here. And I mentioned when we were down here, I said price is initially showing weakness. It's going lower. Traders are going to get caught short doing that, chasing price going lower. They're going to reprice to 41.05. There's buy side liquidity resting there and a fair value gap. The market immediately after my post runs to that level. I engaged that with a demo trade. I entered it and I took profits below that short-term low here. And then I'll teach you how I knew this was reversing on me and saved my stop and also took a second partial off. It rallied up once more, blowing out that short-term high. So we have a lot of chop in the initial opening range. Low, higher high than that high, lower low than that low, lower low again, then rallied through this high and left this fair value gap. Consolidate a little bit in here, traded back down in, once more back into the opening price at midnight, which is this line here. If you're bearish, you want to be going short at or above that level, or as close as you can get to it, like this one here. Okay, the market drops down between 11 o'clock and noon. It consolidates, then retraces back up, takes buy side here, breaks lower, returns back to a swing low, which we'll talk about in a moment. Breaks lower again, aggressively runs for that 470 level, and it's off to the races down into the daily fair value gap. Now, if you look at the daily range through the scope of a 5-minute chart here, you can see the opening price here at midnight. Prices gravitates around that. And in London, they rally and start building in a premium ahead of the 8:30 time window. The market creates the high, breaks, takes out short-term sell-side liquidity here, retraces back up into, consolidates for the majority of the afternoon, then it breaks lower, and then aggressively attacks the sell side below 470, and then going right back down to that 440 level, and then hanging out and consolidating and closing inside that larger daily fair value gap. Now, I want you to take a look at this price action here. We're looking at the afternoon. So with the morning aside, because I walked everyone through that basically on Twitter and with pre-market analysis and commentary, the rules for a afternoon session trade. Before you even consider trading in the afternoon session, you have to consider, what is the daily range trying to do? Is it trying to expand higher? Is it trying to expand lower? Did it reverse in the morning session? And is it going to have a counter trend move? Or is it going to just consolidate because it's waiting on a big news event the following day? Today, we had a big news event. We had employment data. The market consolidated. And we had a bearish bias. We were looking for 40.70 based on my experience. I was generous enough to give that to you beforehand with commentary suggesting that we would trade down into that lower time frame fair value gap on the EMA S&P's daily chart. So the framework was one-sided. It was not ambiguous. It was specific about what we were looking for. Once the market started to break after lunch, when does lunch end? At 1 o'clock in the afternoon, New York local time. That is here. So 12 to 1. There is our New York lunch. If we're bearish, what did I teach you? The market will do what? It will clear the stops during the lunch hour. What highs were formed in the lunch hour? Here, and prior to it going in, this was the buy side liquidity pool or short-term high. So at 1 o'clock, the algorithm reprices and runs to take the stops above the buy side here. So during the lunch hour, we're seeing that it took the stops here. You can, if you're aggressive, you can put on a trade here because we're in a directional move. We're trying to anticipate a large range day, and large range days can typically form with a busy lunch schedule. And I just recently taught this, that the market, if it's going to be a fast market, during the lunch hour, it can create a significant high or significant low. But the premise mainly is, if you're bearish, you're going to be looking for the highs to be swept because they don't want participants to be profitable that may have assumed a short position from the morning session, or prior to this high forming, they may have already been short here, and instead of letting the market release and break to a lower PD raise in a discount market, the algorithm reprices, knocks those individuals out because it floods the market with what? Buyers at a higher price. Higher than what? Than it was here, than it was here. So smart money utilizes this run above this short-term high as an influx of buying interest and liquidity that's available immediately while the market's being priced here and held at that level. Smart money will go in and sell to those buyers that their orders will be resting above here. So their stops are being tripped. Their short position is being knocked out. And conversely, there's traders that would see that high being broken as a means of getting long, and they have a buy stop that would trigger them getting in on a breakout. So smart money is cannibalizing those two types of orders. What orders are they? Buy side liquidity. So the counterparty to their short has to have buying interest. That buying interest is being engineered by the algorithm when it runs up here. So smart money goes short here with the expectation that they can take off a portion here back to an old low of 470 and then 440 and then into that fair value gap on the daily chart. Now, sticking to the rules of the model I'm trying to teach you If you do not trade during the lunch hour, that's fine. You're going to wait until after lunch before I set up the form. Those of you that have been studying my channel here on YouTube, you understand that this swing low here to a higher high than that of here is a breaker. Okay, that's my ICT bearish breaker. What is a breaker? A breaker is a pattern where price runs out a pool of liquidity. In this case, it's a buy side liquidity pool. And then it reverses and trades back down below that short-term low. If it trades back up to that and the narrative is bearish, notice that it's not just simply we have this pattern here and that's all it is. No, you must know what the market's likely to be reaching for. If you leave that out, it's not a breaker. It's a gamble. It's a guess. It's a speculation that's aimless. Notice the difference there? So this down close candle, the lowest one prior to the move up, clearing that short-term high, and I teach this on the YouTube channel. So if you've already gone through the 2022 mentorship videos and you're caught up, you're welcome to go through the other videos as well. But I'm trying to keep your focus in this series because it's very easy for you to go into other series on this YouTube channel and get inundated with things and create so many questions that will feel like they are pertinent to this model, and they're not. Okay, but I'm just giving you a comprehensive view of what it is I look at in price, what I'm judging, whether or not is it likely to continue going lower. And as price starts to move back up into this level, I would expect and anticipate that level repelling price and go lower, and then be aggressive about trading below that because there's sell side there, and then not going below this low here to go higher. We want to see it go through there and accelerate going down. It wants to run quickly for that 40-70 level because there's a larger pool of liquidity below that, and then aggressively run into that fair value gap on the daily chart because that's the imbalance that the algorithm is going to want to reprice to. In the afternoon, obviously you can see post breaker being traded to. Heaviness falls below 40.70 and then accelerates. See that? See how fast it accelerates down? Small little consolidation, no retracement, no return back to an old low broken, support becomes resistance, forget about it. This is an algorithmic sell day. Retail doesn't get to do a lot of those retail concepts. You either are on board beforehand or you watch the ship sail off without you. Okay, and that's basically what you end up seeing here in the price of 440. Gets traded through and back into that daily fair value gap, as I mentioned, would be the likely target for today. All right, so this brings me to the point of the video that I promised everyone on Twitter that I would touch on. And I did a little bit of a rant on Saturday. I took my car out for a spin, and you all got to see what it's like to be around ICT, where I don't have the benefit of having the Camtasia Studio editing out, because there's a lot of times while I'm making these videos that things in the house will go on. My kids will interrupt me. My dogs will come in and bust in the door and want me to play with them. Or I'll say something wrong and get upset about doing something incorrectly while I'm producing the video. So they're like, human traits. I'm a human being. I make choices sometimes that aren't the best ones. And sometimes, I am prone to have chemical imbalances because I'm bipolar, and I don't make any excuses for that. I don't make any attempt to hide it, because I know if you spend time with me long enough, you'll notice it. So during the rant I gave on the Twitter Spaces, I guess it's like a podcast feature they're trying to build up on that platform. I tested it out this weekend, and I mentioned that I would share with you all the model I'm teaching my son, Caleb. I'm not afraid to teach it to you. I'm not trying to hide it from you, okay? But I wanted to make sure he had some foundation to what it is he's trying to do. And I wanted to spend time with him and figure out, because of his characteristics, what's his concerns, what's his fears, what's his comfort level? Is he trying to, trade the whole daily range, or is he trying to get in and out real quick, small little pieces? That type of personality inquiry that you have to do as a trader too. You don't take a model because you see somebody else doing well with it and say, I'm going to do that. Because if it doesn't match your personality, if it doesn't match the way you see and engage price action, you'll never make it work for you. Okay. So I'm aware of that. I'm cognizant of that effect on individuals learning things, not just this, but anything. But with something so technical as this, in this industry, with as many as we have in terms of variables for choices, what to do, think about all the indicators that are out there. Think about all the trading styles and methodologies and teachers and their respective personalities. So you have to be able to, number one, be able to put up with them and listen to them, to learn from them. And sometimes I'm off-putting. I can't retain the attention of everyone, or they don't like my teaching style, or they don't have any faith in me, or whatever. I'm not going to scratch the itch for everyone, but for those that sit down here and they want to learn from me, obviously you've seen live accounts being utilized this year. My son started trading in the first week of May of this year. He started trading a live account, and he opened up with AMP futures. And I'm not repping them. I'm not saying anything for you to go and open up an account with them. But I have been asked, are they a good broker? I can only report the fact that he has not reported any issues with his fills being executed and done professionally. The only issue there was they weren't happy with the fact that I was sharing one of his statements that he emailed me, and they asked him to ask me to take it down. So I took it down. But I can talk about the numbers. Okay, so here's what he did. He had a equity low of 28.10, and in a matter of a number of weeks until just at present, he didn't do any trades today. Okay, we were observing. I was teaching. I did trades myself, but he was observing. He's in the position of spectating, not speculating today, because I wanted him to understand that the large range day can creep in like it did in the afternoon, and it may not look so clear in the morning, but we were looking at it with that lens, and I was showing that beforehand in the marketplace and in the commentary on Twitter. But he's at 18,300 plus. So in the course of like 4 weeks, that's about 400% return. So that's, in my opinion, that's a remarkable growth. That shows, obviously, he knows what he's looking for. He knows what he wants to do. He wants to obviously grow his account. He wants to build it up and not try to hit grand slam home runs. And because he works at a low-paying job, it's real easy to hit that threshold that he earns on a weekly basis. So when I sat down with him, one of the things I felt was imperative was he has a very short attention span. He's easily distracted. So I wanted to give him a model that gave him a very low threshold for a return of points or pips. And since we settled in on the index futures market for him, it ignores the spread issues that are going to be a plague for traders that are using Forex. It's a professional market. It's a very liquid market, the E-mini S&P. And it's systematic in the way it delivers price. So if I can sit down with him, I want to take him to the chart at a specific time of day with a specific logic in mind, and then have him hopefully see a pattern that repeats. It may not form that day he sits down, then he has to just move to the sidelines and do nothing. That choice to say, I don't see it today, and then if something forms after the charts get closed, or if the trader moves away from the charts and they come back later on and they see it moved a certain way, that fear of missing out, you need to squash that quickly in the beginning. And the only way you do that is by backtesting and seeing how many times these things form. So while we did that together, because I'm his father and I'm literally next to him. Like I'm next to him, giving him my experiences as close as I can possibly be, next to doing it. You know what I mean? Like I'm sitting here acting like the internal voice for him. I'm saying, okay, what do you see here? What do you see there? What happens if you did this? And what happens if you did that? Where would you think price is going to go? So I'm literally being the internal dialogue that 30 years of experience would have spoke to him internally. So he has that inside advantage, okay? That home field advantage, if you will. He's pushing the buttons, obviously, and if he elects to do nothing based on what I'm asking him about in the chart, sometimes the market moves, he's not in it. Sometimes he does something and the market does something against him. And he has that decision of, do I let the stop loss get hit, or do I just bail now and figure out what it is that I did wrong or what I'm uncomfortable about? So it may not be the ideal learning conditions for everyone, but I know where I'm leading him. I need him to be prepared to obviously look for a specific element in price action, and it's algorithmic. Okay, I'm not sitting down with him with anything retail. I'm not filling his head up with, bull flags and bear flags, and when they fail, because I teach my, price action students to look for those types of things. I'm not teaching him trend lines. I'm not even bringing any of that stuff in. I'm taking him right to the brass tacks of what it is that the algorithm's going to do. Because I only want him to be a one-trick pony. Right now, that's all he needs to be able to feel confident to leave his job. So I said I would teach it. I said I would show it to you. So I'm going to kind of give you the loose framework, what it is that I try to teach him, what he's looking for, those types of elements. But before I get into it, I want to remind the viewers, because this might be the first video you came across with my content. So I want all of you, and to be reminding those of you that have lost this in the conversation throughout these videos, that price is delivered by an algorithm. Okay. There is no buying and selling pressure. That is something that they use as a excuse for what the market does and or doesn't do. And algorithmic theory is based on time and price. Now, time and price, when I wrote this algorithm, coding it leans heavily on the time element. Okay, what does that mean? What time of day? What day of week? What week of month? What month of year? What seasonal influences? So there's several factors I'm encoded in the algorithm that will seek these reoccurring phenomenon that can be capitalized on by those individuals that know what it is that they're hunting. Okay, that little billboard that flashes, hey, it's time for you to engage now. Okay, that signal, that pattern, that setup, that framework, whatever you want to call it, the moment right before you push a button, that's what I'm trying to take his attention into. Okay, I'm taking all the other distractions away, and I want him to go right in and look at that specific element. Price levels are useless until time is considered. Just because it's trading at your favorite price level, this is the reason why support and resistance is a fallacy. There's many instances that anyone can go back in hindsight and say, here is where this line worked and it repelled price up or down. Do it live, consistently. Pick the right level consistently. And that's the problem that retail traders have. I went through that same thing. I couldn't pick the right support and resistance level, even the higher time frame ones, because sometimes you'll have a move where it'll go up, hit a level that would be otherwise viewed as resistance, and then it starts to go down, and then it goes one more time up higher high, and then higher high takes my stop, and then I'm afraid to go back in and go short, right? You've all experienced it. I did the same stuff in the 90s. 1992, 1993, 1994, all those types of fearful events of getting stopped out and then abandoning my opinion about what I thought the market was going to do. And instead of saying, okay, the framework's still valid, I just had the entry wrong. Let me go back in with less risk this time, less leverage this time, and see if it pans out. But like most of you and everybody else, those stop out events create fear and anxiety and uncertainty. So that's why time has to be considered first, because the algorithm is going to start working a specific macro. That means a short order of things that it will do as instructions. It's going to seek a specific level, move to a premium, move to a discount, suddenly move, or consolidate and wait for another time element in that same trading day or trading week or month. Okay, so that's the reason why I'm teaching you that that element of time is crucial. Your inability to know everything that there is to know about time is going to be the area which you will have the largest growth in, but you'll have the initial adversities. When to do this, when to do that. When going through the motions of what it is I'm teaching you, it'll happen for you that you understand why certain things are occurring at a specific time. And I can't articulate it any better than that. It's just a matter of doing it. Sitting with me every week, looking at what I'm trying to share, taking your attention to a specific price level. Over time, your eyesight, your understanding, the visibility, the perception of price will be dialed in. You'll know what it is I'm doing because you've done it with me for days, weeks, and months. Okay. Time is of no use unless price is at a key PD array. Okay, just because it's time for you to be able to sit in front of the charts doesn't mean anything unless it's at a key PD array. So in other words, blending the two yields astonishing results and the precision that I share with you. I've done a plethora of examples proving precision, proving prognostication, forecasting, objectives, targets, the whole business. Okay. It's not my aim or goal to try to do magic tricks for you. Okay. I don't want to be out here trying to be David Copperfield of the markets and say, here, watch this sleight of hand. And are you amazed by that? Are you amazed? My task is I'm making you a wizard. Okay. I'm teaching you the craft. I'm not up here performing for you. I try to make it as engaging as I can to keep the attention span on those that are very limited and bored easily. I try to get their attention quick with little things that will draw their attention and hopefully keep them engaged long enough for the effects of learning properly to take root. So if you look at this price action that's been staring at you, does anything stand out on this chart? If you're a new student to price action, or if you're a new student to me, a lot of these things that you're looking at here in terms of the price action, all the movements and such, it looks like a foreign language you've never learned how to read. Well, if you're looking at price action like this, it looks like it has no reason for doing what it's doing. It's completely random. And one of the fun things I get to experience as a mentor with the insight that I have, being in a position where I have done a lot of the producing of these things and the authorship of it, I get the benefit and pleasure of watching people get blown away by the incredible detail that this algorithm repeats and follows. If we take all of the noise away from just all this back and forth movement and we add just a little bit of lipstick, suddenly we have a lot more to work with. What's the first element to algorithmic theory? Price or time? Time. So time begins in the morning session for us as a index futures trader at 8:30. That's when the news embargo lifts. That means at 8:30, that's when there's usually a news event or some kind of economic report that comes out at 8:30 New York local time. So that's the reason why I tell you to set your clocks on your TradingView platform here to the local time in New York. This candle right here is the 8:30 candle in New York time. This morning, I outlined how I felt that we would likely see the market move to a liquidity pool, a specific liquidity pool, and it would draw down and attack the sell side. I teach my son to look for setups that are going to target a specific pool of liquidity. It means I have to have a clear idea where the market's likely to go up for buy side or down for sell side. I'm not trading a support and resistance idea. I'm not looking to go to a level to watch it repel away. That's not what I'm doing. That's a fallacy. That's the reason why retail traders drop the ball so many times or blow their accounts and never find consistency, because they're trying to force something that is designed to fail. I don't know why it's so hard for people to acknowledge when they are met with extreme adversities trying to force retail logic to work. Can you make money with retail concepts? Yes. Yes, you can, if you understand how to reprice like I'm teaching it. If you did those types of things without understanding why the market should do what it's doing, why is price booking the way it is? What does that mean? Why is price going to these specific levels at the time it's doing it? There's a logic behind that. And for some that want to say there is no technical science, at some point, when does it stop becoming useful? All of it's useful. Every tiny, minute little fluctuation in these price movements are absolutely controlled, engineered, and premeditated. Either by AI, artificial intelligence, that's the algorithm. It's following the code that's been written for it. Or there are times when manual intervention comes in and they will send price to a specific price level. Sometimes it's going to be abrupt and aggressive, and it may not be fun or pleasurable being a part of that move. Other times it will be exhilarating because you were on the right side. When those moments of intervention occur, that's a manual intervention. That means someone is literally going in and manipulating price to do a specific thing. What would that be like? FOMC, a rate announcement, something to that effect, and the market will reprice aggressively, quickly, to a price that's well outside the scope that would be reasonably expected for that short-term perspective. Big explosive price movement. The economic calendar is useful in that respect because you can go in and see where these events are likely to form. So I'm looking for days in my son's model where he can go in and engage price when there is a medium or high impact news event. Or if there is a lack of one, he can practice, but he shouldn't be engaging with his normal risk percentage. Okay, so the first element is time. So at 8:30 in the morning, that's when a news embargo lifts. That's the first element of time that I taught you with this model. The second one is 9:30. Okay, that's right here. The first here. At midnight New York local time, that opening price is here. Did the market rally above that opening price at 8:30? Yes. Are we bearish? I proved this morning I was expecting lower prices. I preferred lower prices. So that means we're above the opening price at midnight. So my Power 3 concept is you want to be shorting at or above the opening price at midnight in New York local time, if you're trying to capture movement on a daily range on a down day. So that opening price, look what happens. We run up, take out short-term highs here. That's a short-term run on liquidity. Who's going to have stops at that 1 minute? Anybody that would have put a stop loss in on these lower time frames. There's traders that are doing that all the time. The algorithm is not aware of how much volume rests above or below a high or low that's penetrated. It has no understanding of that. It doesn't need it. For folks that are perplexed by that statement, and I've said it several times in the past, you ever play a video game? How about Pac-Man? I'm a child of the 70s. I was born in 1972. August 8th, 7:11 p.m. See that? 7:11. Lucky 7:11. I came in the world with some luck, didn't I? So when you're looking at a game like Pac-Man, okay, what keeps Pac-Man inside the boundaries of those lines that make up the maze that it runs around and collects and eats those dots until it gets to a power dot or chased down and killed by the ghosts? The program language keeps him limited. The playboard or game maze has limitations. Those limitations are programmed as such. Every video game today, they have a map. Okay, Fortnite, Call of Duty, Battlefield, all that genre of video game creation. All of those maps or territories that the player gets to enjoy and explore, they have limitations. Okay, the daily range has those limitations programmed into it as well, until manual intervention is brought in and those initial boundaries are removed. Okay, so think of price like that. So if you know that we're likely to see that, in terms of like an analogy, we're at 8:30, we're above the opening price at midnight, we ran a short-term high here. The algorithm doesn't care how many orders were above that. It doesn't care. It just has to take out a short-term high. It does. So it's at a premium. It took out buy side. So what is it likely to do now? Because we're in a bearish day and we're above the opening price and it's at 8:30. Reprice for what? Sell side. Where's sell side? This level down here. 4101. Or what? 4100 big figure. 4100 level. So there's liquidity resting below that. What kind of liquidity? If market's price is here and sell side is here, it's old lows, there's sell side below that. So market price is here, relative equal lows in the past is this level here. Go back in the beginning of the video. Okay, you'll understand what that level is then. That liquidity is sell side. We're at a premium here. This would be a discount because market price is here or here. Anything below it is what? Discount. So the algorithm goes from buy side liquidity at 8:30 on a bearish day above the opening price. Wait for the market to trade lower. It does. Short-term low. See that? Swing low. Trades through it. Creates a fair value gap. Rally back up to it. Sell short with the expectation it's going to run to sell side liquidity. This is what I'm teaching my son to do at 8:30. That's all he's trying to capture there. In this move, he may not run all the way to the sell side. He's going to get his 5 points. Once he does, he's stopping. He gets out. And then he watches the move go to the sell side liquidity pool. Why am I telling him to get out at 5 points? Number one, 5 points is very, very easy. I think that is the lowest threshold of points a setup should hopefully yield. If you're trying to do anything less than that, you're doing ultra short-term scalping and the commission costs will kill you. It ain't worth doing. And I think 5 points is an easy threshold. You can do it once in the morning. You can do it once in the afternoon. Even on a really weird, choppy day, you could reasonably pull out 5 points if you have the experience. You don't have that experience yet. So let me put that in your mind right now, because I don't want you thinking, well, I'm going to go out there tomorrow and do what ICT said. I've only been trading for a week, so I think he's really convinced me that I can pull this off. And it's going to be 10 points a day for me, 5 in the morning, 5 in the afternoon. This is going to be cakewalk. I might as well just put in my 2 weeks notice now and tell the boss, pound sand. No. No, don't do that. You're not ready. But if that's a goal for you, start working towards it. So over time, my expectation is that my son will have a better understanding of what he's doing, and those 5 points, he'll have hopefully learned to take a portion off at 5 points and then hold for that liquidity pool to be hit. And because of doing that very thing, he's rewarding himself initially while he's learning. So it engages him. It shows that he can make more money doing this than his job. Okay, that does not mean that you can do more than your job. I'm saying this is my son. He has me as his father. I'm sitting with him. I'm coaching him. I'm telling him what he should be focusing on. I'm questioning why he isn't focusing on other things. So I'm actually like co-piloting him. I'm giving him, visual and audible clues as to what he should be using to navigate price. So don't think for a moment, folks, that he sat down, and did like a couple days of talks with daddy, and now he's out there making 400% gains from his equity low up to where it is now. That is not what took place. Okay. He has the benefit of me sitting with him, talking to him. Okay. Much in the same vein that I did with you all this morning on Twitter, where I said, this is what I'm looking at. These are the levels I'm looking for. If this breaks, I think we're going down to that level. I'm doing that on a minute by minute basis with Caleb. So he's literally driving a car with me talking about every pothole, every potential hazard that's coming. I'm reading the mind of all the drivers around us and telling him what they're going to do before they do it. So it's a totally immersive experience for him. And admittedly, it's a little intimidating for him. It's too much at sometimes, and we have to repeat certain things, or he gets confused, or he's apprehensive, or reluctant to do something, or he second guesses something. So, all those types of things that any human being would have, with dad's expectation to learn how to do this. And also you're dealing with real money. So I'm teaching him to respect what to do. And when it's wrong, he feels it. It's not a matter of, well, I can reset a demo account. No, this is real money. So when he sees the money going up in his account, he feels that good feeling. If he has entered a trade and it's drawing down on him, he's feeling that. Now, I know what I'm looking at. I know what I'm expecting. He doesn't. So I'm allowing him to experience those things. But 5 points, I think, is a reasonable low threshold. Over time, he will, by default, learn to trade with more than 5 points. But I got to give him something to hit that is easy, that low-hanging fruit approach. That's how I teach. Just like I taught on baby pips when I first came out, 25 pips a week. You should be aiming for that. And when you get it, stop. Does that mean when you're trading 10 years from now, that's all you're going to do? No. People that have been highly critical of me, they like to take the things I say out of context and make a straw man argument about it. And they have no idea what I'm doing with the new student. I'm targeting an audience that is trying to do something that's going to give them encouragement, feel like they're progressing. And don't think for a moment that 5 points just once a day isn't good, because you could literally do very, very well. Think about it this way. If you just did 5 points in the E-mini S&P, one contract, and never engaged money management to the degree where you start parlaying it up and start doing 2 contracts, and then 2 contracts becomes 4 contracts eventually, and then eventually you're trading 8. If you just did one contract, okay, calm down for a second and just listen to me for a moment. If you just did one contract of the mini S&P, that means 1 point in your favor or against you is worth $50. Now, $50 times 5, that's $250 a day. If you did that consistently once every single day, that's 25 handles or points a week. That's $1,250 a week. I'm quite certain, after polling my audience on Twitter, which isn't my entire audience, obviously. I have a lot of people. There's a lot of people that actually leave comments on my video on YouTube that I can see that they're a subscriber, and I can also see the comments that are left by subscribers. Usually, I answer the questions that people present to me if they're a subscriber, because it's kind of like a little perk, because I have like a goal. I want 1 million subscribers. I ain't gonna lie to you. I want to have 1 million subscribers on this channel, and I'm surprised and really honored and humbled that so many of you subscribe to this channel. I mean, 260 some viewers. I thought by the end of the year I could have had 250,000, but now I'm almost on my way to 300,000 before I know it. This channel could be in a year or two, at my goal of 1 million subscribers. But folks that follow me and they leave comments, if it's a comment that I want to address, I usually will respond to those that have that little mark next to their name. You can't really see it, but I can, because it's the channel. I'm the owner of the channel. So I can see who's commenting with a follow. And if you follow me, I appreciate that. I thank you for that. But I don't want any of you to think that you're going to make 5 points every single day. For instance, I took a loss of 5 points yesterday. I could have easily went back in and made 4 times that later in the afternoon. But that's just me. You don't have that skill set and confidence yet that, okay, if you take a loss and you took 5 points as a drawdown, you're going to want to go back in here and do it right away. Whereas I can, and I chose not to. Because I want you to feel like, okay, it's okay. And I even proved that I can call a move even in the afternoon. I said, this is where it's going to go. I pointed to a specific level and went to it. I said that we would run out the lows and then we would break a trend line that retail thinks is, noteworthy, and they destroyed it. Go back and look at the comments on Twitter. I don't delete a single tweet. 0. So I'm laying breadcrumbs down for you, but I'm not going to spoon feed you. You're going to earn it here. And that makes some of you angry. It frustrates some of you. And no amount of frustrated replies to me or, pointed statements is going to make me change the way I do it. Because once you earn this skill set, you will not regret what you went through to get it. And you will treasure it. You'll appreciate it. It's not like reading a book that teaches you a magic trick and then you want to go around telling everybody how to do the magic trick versus getting good at doing the magic trick. There's a difference there. Okay. So what I teach my son to do is at 8:30, he looks for a setup like this. If it's a bear scenario, he's looking for liquidity below the marketplace. And he's looking for some type of framework where it gives a fair value gap. That is his pattern. That's what he settled in on. And we're going to run to liquidity. And if it gives him 5 points, he's out. Even if the framework allows for 30 points, he's getting out at 5. Now, I already know some of you hotshots that's been doing it for a while or like to be critical or troll me. And just run your mouth. Oh, this guy, he's telling his son it could move 30 points, but he's getting out at 5 points. Who does that? Someone that's never traded live money before. That's who's doing it. Okay. Someone that's already made 400 and some % in 1 month. That's who's doing it. Okay. Someone that hasn't had a losing day in weeks. That's who's doing it. So sit down, take notes, or move along. In the afternoon, there's a setup as well. We'll get into that in a moment. But the next area of opportunity is the 9:30 hour. Okay, so equities open at 9:30, and this is one I outlined. The market was down here. I mentioned on Twitter, I said, okay, they opened it up at 9:30, initially started sending it lower. And we'll talk about that in a couple minutes of what that was and what information can be gleaned from that. But I said that they're going to take price up into the fair value gap and also clear 4105. It's all time and date stamped, folks. So you can go back on Twitter, take a look at it. It's there. It's undeniable. It's not ambiguous. It's very specific. Look at the time on your chart. It's here. I'm saying at 4105. That's where the buy side liquidity is. That's where the stops are. And it's a fair value gap there. It's going to reprice there. And then you're going to see the move, the real move for the day. The market drops from there. I went short on a demo account. And as price went below this low, I tweeted first. Go back and look at the little recording. Okay. I'm not in here because there's people already going around in other forums and other social media saying I'm trying to pump and dump. Because they know I have a big audience. They think I'm going to go out there and say something, hopefully create some kind of movement in the marketplace, and then I'm going to get out before I say I'm getting out. No. I literally record myself saying, pay the trader, and then I go in and I take my partial as it goes below here. Go and watch the video. So I'm not doing any of those types of things, folks. Okay. I'm going to be your best friend. I'm going to be the best friend you could ever have in these markets if you just simply relax and trust me. I'm here to help you. I'm not here to ask anything of you except for subscribe. That's like a trophy for me. If I can get 1 million subscribers, I want to have that. I'll put the work in to earn it, but I'm not asking you to pay for anything. I'm not asking you to worship me and cheer my name and all that stuff. None of that. I just want you to have fun and hang out with me. That's it. Because I promise if you put the work into this stuff and hang out every single day, show up every single day, even if you don't understand it, if you feel like you got confused about what it is I'm doing, keep showing up every single day. That discipline will yield results. Each one of you are going to have a different timeline as when you're going to get it. I don't have a deadline. I'm stopping when it gets to this date. I'm here now. Okay. I'm enjoying myself. I'm having fun. And hopefully you guys are having fun too. But this setup here eventually came back and ran back above the short-term high and ran here. So we went one more time where? Above the New York midnight opening price. So we're at a premium and above the opening price at midnight. And it consolidates in here. And then it breaks down. And then later on in the afternoon, we'll see what it does. Now, if you watch the video, you can see that I actually entered in here, went short. I was aiming for this. I had an objective of taking 2 contracts off here. So it went below that. I tweeted take partials or pay the trader first. Then I went into my demo account and closed out the 2 as it went below that low. So I was managing your expectations. I was showing you what to do with your demo account if you were doing anything and engaging. And then I did my version of it. So I was given the instructions first. And then when the market started going up, I outlined this order block here. It started to repel away from that. I actually mentioned I wanted to see price stay below this level here. All I did was extend this and then mentioned that overtaken order block here was problematic. I had anticipated, if you watch on there, on that short-term video, I had pulled up the partial close of 3 more contracts. And my stop I hadn't moved, except for moving the break-even, a little bit better than break-even after I took the partial here. And then once it went above this order block here, that's when I closed 3 more contracts before the stop loss would hit. Now, I could have closed the entire order, but to me, that would feel like panic, okay? I don't mind the stop loss getting hit because that's teaching you that's what they're paid to do. You're paying a stop loss to do its job. I'm not worrying about price going higher than my stop loss. But if I have an ability to take something off before the stop is going to go there, and maybe it goes close to the stop loss and it doesn't hit it, I've taken something off, which was that initial partial here, plus 3 more contracts, and I had a remaining 3 contracts that got stopped out better than even. So I didn't scratch on any of the position. I didn't take, in my opinion, large enough position off down here in retrospect, but that's how it's going to be for you. Now, the question is going to be this. Why did I pick this candle? Why was I concerned about it when it went above it? And why did I close the 3 contracts when it went above that? How did I know it was reversing, basically, is what you're asking. Now, if you look at this sell-side liquidity pool we have outlined here, that was explained on Twitter. It's also been shown on this video here at the beginning of the video. So if you look at the liquidity up here, the old lows, we went below that. So sell-side's been tapped here. Then it went lower and created relative equal lows here, creating what? Another level of sell-side below that. It went below that. So we now have another low formed here. What's resting below that? Sell-side. People are always trying to buy lows. They're trying to pick bottoms. So the sell side gets taken once more here. And then this low gets taken here. So notice what's occurring. We went below sell side here, 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 and here without moving very much. Notice that? So after we've taken buy side liquidity here, it should have been off to the races and went lower. And this should have capped price on the upside because it's an up close candle. Institutional order flow my rules for teaching that to you is if we're bearish, and order flow is bearish, this should have stopped price like it did here. It should have maybe touched it one more time here or just bumped above that short-term high and then went aggressively lower. It did not do that. That's why if you watch the video of me actually doing the trade, I actually pull up the order to take 3 off because I'm watching to see if this is going to fail, because it didn't tear off and take that low out, because it was reaching back up in its order block and then started going into it. I knew I was going to get smoked on the stop. So it would be easier for me to just take partial 3 off, which I had pulled up on my chart ready to go, versus just clicking to close the entire trade, which in my opinion wouldn't be as instructional for you, because I want to show you how you can still many times take something off again and it might not hit your stop loss and then it resumes going in your favor, and hopefully you can add those 3 contracts or whatever the portion would have been if you had taken the trade, put them back on and add it, as a pyramiding type thing. But because we took this up close candle out, that was problematic because we had multiple levels of sell side taken below the original sell side liquidity that was outlined in the beginning of the day on Twitter. So in short, what should have happened was we ran the buy side here. That should have been the high of the day, and then it broke lower. But because it took out this candle here, after taking multiple levels of sell side, what's the algorithm going to do? Seek buy side. Where is it now? Above this high here. So it's doing that run here and then back above midnight opening candle price at opening New York local time at midnight. And in the afternoon, if my son has taken a trade in the morning and was profitable, he'll do another trade in the afternoon. He's aiming for either 8:30 or 9:30 for his morning session move. If he gets his 5 points at 8:30, he won't trade at 9:30. If he misses something at 8:30, he'll try at 9:30. Either or, he's trying to do one time in the morning. Now, he can take a loss at 8:30, then he can try to make it back with the 9:30 setup. If he misses the 9:30 setup or takes a loss in the morning, he can trade the afternoon. If he makes money in the morning, I tell him paper trade or demo trade the afternoon. Okay? Why? Why not push your edge? If you have an edge ICT, if your son's so good and he's doing what he's being taught to do, why shouldn't he be trading every session move? Because I'm not teaching him to be greedy. I'm teaching him discipline. Because if he can see that he can make more and chooses not to do it, there's a certain measure of confidence, assurity, contentment, knowing that you can go into these markets anytime and get it. And that fact, that understanding, that realization is a peace of mind that keeps me from going in and over trading. It keeps me from going in and doing more than is necessary. And it never allows me to fear and keeps me from ever fearing that these things are going to stop working. Like, I understand that I get lots of new students and they see what I'm doing and they're afraid that all these people that are following me are somehow going to break the market because they're all doing the same thing. No, because you're going to find setups that are going to be different than I'm entering. And I can do a lot of other things that aren't even in charts. So I'm not worried about these things failing because I taught more people to do it. Because if you look at the folks on my Twitter feed that are just, subscribing to me and they're looking at everything I say and they think that's a code word for take a buy or take a sell. And they're rushing in to take a trade. They need to be slowing down. There's always going to be people out there that just because they're being exposed to this content, they're not going to be disciplined enough. And there's going to be people that come to this YouTube channel and they are watching these videos and they're studying the concepts and they're never going to make it work for themselves. Not because they don't work, but because they're doing things with them in an undisciplined manner. They're doing things willy-nilly. They're trying to recreate the wheel because they want to be able to say they did something. They made something. They created it. It's their authorship. It's their concept. It's their thing, their model, their approach to what they learned from me. Because it's clout. They want clout. Clout is the thing everybody wants right now. Clicking the buttons, watch my videos, come to my channel, that type of thing. Attention to me. And those types of people aren't going to be the successful ones. The ones that don't care about being looked at or cared to be followed. They're going to be probably the best out of the entire fold here. Because that's how it is in my private group. The ones that are the most quiet, they're the ones that are doing it the best. They're not trying to make an image on themselves. They only care about the results, and their results are significant enough for them not to look for outward, approval. But in the afternoon, what was the time I taught you in this mentorship? When is the afternoon session for PM session trading in index futures? After lunch, but specifically what time? 1:30. So at 1:30, right here, we're leaving an area of buy stops that have been taken. It's breaking down. Then the market returns back to a bearish breaker there. Then it starts to go lower. We have displacement here. That could have been an entry there. Once more low taken here. And now we have relative equal lows. They are broken there. See that? This is what I'm training my son to see. This is a valid setup. But I'm looking for these types of things for him, because look what this is. This low, and this low. What's resting below that? Sell side liquidity on a bearish day. So does it want to drive down into that? It does. Does it create an imbalance there? It does. Does it trade back up into it? Yes. That's where he's going to be selling short. And he's looking for his 5 points. And then he's watching and studying. Does it go to that 40-70 level that I was talking about? Does it go down to that daily fair value gap that I was talking about before the market opened this morning? And those things will deposit pseudo experience that over time results into real experience. And then he can lean on those instances of experience where he's been here before. He's not intimidated if he's done it wrong. He's not fearful that the market's changing the way it does things because he's now suddenly profitable. And it has a series of losing trades or whatever. He's not losing his mind because he has taken a trade that he felt was lined with likelihood and probabilities in his favor, but then failed. He's not discouraged by that because he knows that these things repeat. So, best case scenario, there's 3 opportunities for him a day. He's looking for just one of them to yield 5 points. If he does, he makes more than half of his weekly salary on that one trade. He's trying to do that once in the morning, once in the afternoon. He's taking a live trade in one or the other. But once he gets one live trade, he's trying to condition himself to do demo. Or he'll paper trade it, whatever. Just watch it and observe. But he's not trying to do 3 trades a day. Initially, I forced him into doing that. I said, take a trade in the morning, take a trade in 8:30, take a trade at 9:30, take a trade at the afternoon. And also sometimes at 3 o'clock to 4 o'clock. That market on close macro that runs by the algorithm. There's a little setup that forms most days of the week in that last hour. And it looks similar to this. It might be a buy day. It might be a buy setup, not just a short setup, but I'm taking him into specific times of the day. Time. I'm taking him to the market at these times. Okay? If you have not been paying attention to this video, I've literally laid in your lap the very moments that these setups are forming. It's up to you to go through your charts and find out if that is true. The lazy won't do it. They want to be told what to do. They don't want to go in and roll their sleeves up and find it. But once you see this, once you see it and you back test and you pull out with example after example after example of how the market sets up like this and it runs to liquidity above or below the marketplace. Count how many times over the last month, 3 weeks, 2 weeks, 1 week, how many setups offered 5 points with something just like this at these key times of the day? And then do the math. If you could just do 1/2 of that, or just 1/4 of that with one mini, It's real easy to see how it's just a matter of time before that thing you call a job no longer is a hindrance to you, because it is a hindrance to you. Where you have your faith chained to their boss's generosity. They're so generous that they make you work those 40 hours, sometimes more, to get that paycheck. That Uncle Sam gets the tax before you touch it. And then you come out and find out that everything's much more expensive today. When you have this skill set, folks, I want you to understand what I'm about to say, and I'm going to close this video. When you learn this skill set, it removes fear. It removes fear of missing out. It removes the fear and anxiety of failing. But it also removes the fear of inflation. Because this skill set will always outpace inflation. I don't care if gas is $20 a gallon. I'm going to drive my Corvettes. I have 8-cylinder Corvettes that I absolutely will not leave parked. I will drive them and I will enjoy them. I don't care. Gas can be whatever it wants to be. It's a write-off for me. Okay? I don't care how much food is going to cost. I hope I can continuously find it. But I'm not worried about what my utility bills are going to cost. I don't worry about what things are going to cost. That skill set that you're learning here, it aids in that. It helps in that. Notice I'm not promising you get rich. Notice I haven't said that. Because I don't want you coming to my channel thinking I'm promising you to get rich. But I am promising you a skill set that offers the opportunity to do limitless feats and wonders. And it's only limited by your imagination. How much work are you going to put into it? How much work have you put into it? Who are you allowing to influence you and discourage you, distract you? Are you seeing results? Am I proving this stuff works? Do you feel scammed? Or do you feel energized and thankful that you're part of a community like we have here that's thriving? It's energetic. They're happy. They're uplifted. They encourage one another. And everyone here knows that they're not being taken for a ride. There's no upsell coming. Doesn't that feel good? It frees you up to just concentrate on learning. There's no angle. There's no sales pitch coming. Isn't that awesome? Isn't that cool? That's like the point is you're in a community that we're all trying to help one another. And all I'm trying to be is the captain of the team and just lead you in the right direction and hopefully avoid the pain and struggles that I went through. Real accounts, real money, real buttons are being pushed. You are going to find that there is a lot of opportunity that you're going to let slip by and not be upset about it. It's going to be one of the most fun experience that you're going to have as a developing and developed student of price action under me. Is you'll see so many setups, you're like, I could do this trade now, but I'm not going to. And then walk away from it after it comes to fruition thinking, I could have done that. And I had the discipline to say no because I'm not being influenced by fear or greed. And when you're at that level and you're consistent, you have graduated. You are an independent thinker. You have mastered fear and greed. You have operated with a level of discipline that is unknown to majority of traders on YouTube, Instagram, Facebook, wherever. That day's coming for you. But you got to go through this stuff here to get to it. It's not hiding from you. I'm not making it hard for you. I've literally taught you everything except for money management, which we'll talk about next week. And then you have the complete understanding of what it is you're doing here. And you're just going to do the same thing every day. Some days you'll get it right. Some days you won't. When you get it wrong, you stop. You don't rush to get it back. And you're going to find the next day, sometimes, there it is. What you took as a loss the previous day comes back sometimes with interest. And that's a good feeling when it happens. It's like, well, I don't need to worry about it. Losing trades is like getting a flat tire. It sucks. It costs you a little bit of money and time, delays you from what you're trying to get to and accomplish. But it's just a speed bump. Costs you a little bit of time and money, but it didn't keep you from getting where you're going. It just created a detour, a delay. But the inevitable happens still nonetheless. You arrive at your destination. Your destination here is excellence, and you don't get there overnight. You get there gradually. One step in front of the other, a little bit here, a little bit there. Sometimes you have to take a step or two back, get your footing again, and resume going forward. And sometimes you'll have to take a detour once in a while. That's all part of it. That's the growth that every trader goes through. But when it gets hard for you, when you feel like you want to quit, that's a moment when you need to just take a break. Take a week off. Don't watch my videos. They'll be here. I'm not taking my videos down. Take a week away from it. Enjoy another hobby. And then come back to it fresh. You want this to be enjoyable. You do not want to make it, I have to do this. It must work. I got to get out of my job right now. Because it's just going to make it harder and longer for you to learn it. Have fun with it. Enjoy it. I have to ask a question here, and obviously by the number of comments in either support of it or there's no interest in it, whatever. But if you'd be so kind to let me know in the comment section if you would like to see me do a very short, I'm talking like 2-minute, 3-minute review each day where the setups were for the S&P and or NASDAQ. I'm not going to do both of them because it takes too much time to do that. But where were their setups for you to engage with what I'm teaching you here in this mentorship? If you'd like to see that as a Monday through Friday short little upload, just let me know in the comment section below. Also, if you could include also what your experience has been so far under my teachings on this YouTube channel. Has it been a positive experience for you? Has it been not so much of an impact on you, or has it been just simply waffle? Maybe I'm missing the mark entirely. Be honest with me, but just be respectful. If it hasn't been your cup of tea, you can respectfully tell me that, and that's okay. I'll just use your feedback to hopefully try to dig in a little bit deeper, and maybe I can find something that helps you, or maybe not. I don't know. But I'm looking for feedback, and that way you can help me in that regard in the comment section below. And until I talk to you next time, Lord willing on Tuesday, enjoy your weekend and be safe.